All right, let's get right into it. What we're looking at here is a fascinating little microdrama that played out in the Indian stock market. It's really a story of how fast market sentiment can flip, all told through the lens of two incredibly intense back-to-back trading days. And this is really the heart of the story. On Thursday, you see the market is just chugging along, ticking up for its sixth straight day of gains. Everything seems fine. But then you fast forward just 24 hours and bam, it is a sea of red. That winning streak isn't just broken, it's snapped, and pretty decisively. So the big question is, what on earth happened? What caused such a massive reversal? Let's dig in. So let's go back and set the scene. We're on Thursday, August 21st. Now, on the surface, the market is still climbing, right? It's another green day. But if you looked closely, the signs of strain were already starting to bubble up. And there's the closing number, 25,083.75. Now, the number itself isn't the most important thing here. It's what it represented. This was the sixth consecutive day of gains. For all intents and purposes, the market was on a roll. But what was actually driving things under the hood? Well, Thursday was a real mixed bag. On one hand, you had this huge wave of domestic optimism, mostly thanks to some really good news on a major tax reform. But at the exact same time, there was this global caution. Everyone was kind of holding their breath, waiting for a big speech from the U.S. Federal Reserve. And that uncertainty led some investors to say, you know what, I'm going to take some profits off the table. And we saw a shift into safer bets, like pharma stocks. It was a classic tug-of-war. Let's just touch on that GST overhaul for a second, because it's a big deal. The proposal was to completely restructure the tax system, basically getting rid of the 12% and 28% slabs, and simplifying everything down to just two rates. Now, this was seen as a huge pro-consumer move that could really kickstart spending. And the market, well, it absolutely loved the idea. This was the main positive force for the day. And then came Friday. This was the day. Everything just flipped. All that good news on the home front was about to get completely steamrolled by a wave of anxiety coming from the global stage. And here is the result of that shift. The Nifty closes at 24,870.10. Now, it didn't just fall. It crashed below the psychologically really important 25,000 level. And in the market, a break like that sends a very powerful, very loud signal to traders. So, why the sudden nosedive? Well, that light profit-taking we saw on Thursday, it exploded into a broad market-wide sell-off. The anxiety over that Jackson Hole speech was still there, but then a new threat popped up on the radar. A looming August 27th deadline for potential new U.S. tariffs on Indian goods. And just like that, global fears completely took over, drowning out the local optimism. And the sectors that are most tied to the economy's health, your banking, metals, IT, they got hit the hardest. So if you boil this entire two-day story down, you get to this one core conflict. It was a battle between a domestic push and a global pull. You had these two incredibly powerful opposing forces just wrestling for control over the market's direction. And this right here is the whole story in one slide. In one corner, you've got the tailwinds, the good stuff pushing the market forward. That's the GST overhaul we talked about, plus some really strong economic data showing things were humming along. But in the other corner, you have the headwinds, the global forces pulling it back. The big one was the uncertainty over U.S. interest rates, and of course, that very real threat of new tariffs. This is the central tug-of-war that defined these 2 days. So how can we be so sure this sentiment shift was real and not just noise? Well, one of the best ways is to just follow the big money. Let's take a look at how the huge institutional investors, the whales of the market, actually reacted. Their actions, well, they speak louder than words. Okay, look at this. On Thursday, the day of cautious optimism, foreign institutional investors, the FIIs, were net buyers. They poured over 1,200 crore rupees into the market. That's a huge vote of confidence. It tells you that on Thursday, the big international players were still feeling good enough to put more money to work. And then, bam! 1 day later, the script is completely flipped. On Friday, those exact same foreign investors became huge net sellers, pulling out over 1,200 crore rupees. I mean, look at that. It's almost a perfect mirror image of the day before, just in the opposite direction. This is crystal clear proof of how quickly that global fear took hold and completely reversed the flow of capital. So after this 2-day roller coaster, where does that leave us? Well, the market is now in a totally new, much more delicate position. It's basically trapped between two very clear technical levels that everyone is watching. You can think of it like a new battlefield has been defined. On the upside, you have what we call a resistance zone. Think of it as a ceiling that the market tried and failed to break through. And on the downside, there's a critical support zone, a floor, that the market absolutely has to hold to keep from falling even further. These numbers right here, these are the new financial battle lines that have been drawn between the optimists and the pessimists. And all of this brings us to the one final critical question. You've got this clear conflict, a strong local policy giving the market a powerful tailwind versus this massive global uncertainty creating a stiff headwind. So which one is going to win? Which of these two powerful forces will ultimately win the battle and decide where the market goes next? Well, that is the question that everyone is trying to answer right now.